last week $94 plus minus. Today's $109 and still moving much higher. And I think it will reach its previous highs of $120, $130. Definitely will go there.
And I
So
think,
this,
Sasha, I think that's on the AI chips that they're planning to introduce in
yes.
2024. So I think that the people are starting to realize that that's going to make a lot of money for them.
Absolutely. So market is always forward looking. So if you're taking their earnings, which were not that bad actually at all, but this new chip what they're developing is, and some people believe that they will compete with NVIDIA, remains to be seen, but
Right.
everything is possible. And so therefore, market is now we are waiting for 2 o'clock Powell's 2 cents worth of
Yeah.
his estimation of the market. I don't think that he will raise interest rates this time. Some people believe that it will remain the same, or there is another still scenario that they may go lower
Mm.
because the earnings are fantastic, the economy is booming. So this high interest rates, well, it's a cycle. Sometimes we have almost zero interest rates for a couple of years. Now we have high interest rates. And I think it will resolve itself. Milan, what do you think of markets these days?
I pay a lot of attention to the put call ratio. Interestingly, the famous book by Graham and Dodd called Security Analysis, it has about 600 or 700 pages, and every serious student of investing studies that book cover to cover. I've read it cover, just that, just first cover. and, and it has nothing to say about the put call ratio. Now, when Graham and Dodd published that book, it was in the 90s. The derivatives did exist, and it was possible to see the put call ratio, but they don't mention it in their book. Another renowned book by Gerald Loeb called A Battle for Investment Survival, same thing, has been around for more than 80 years, a very worthwhile read. Much of it still applies, even though it's that old. Again, Gerald Loeb doesn't mention anything about the put-call ratio. So I'm going to talk to some knowledgeable people about why that is, because I pay a lot of attention to the put-call ratio. So for instance, the put-call ratio a year from now for the market as a whole, for SPY, is negative. The market is going to be down. Now, recently, about a week or two ago, the Saudi Arabians hosted a meeting that we call it Davos in the desert. And they had invited all the major investment people on the planet there. And they universally agree that the market will decline for the next while. They don't know how long, but certainly the put call ratio shows a negative market a year from now, 6 months from now. Now, there's very seldom do you have complete agreement among investors because you need this agreement in order to have a market. If somebody is going to buy, somebody has to sell. Somebody is going to sell, somebody has to, they have opposite opinions. But in this Davos in the desert, which took place, I think, about a week or so ago, all the major investment, the heads of Wall Street banks, people of that sort, the central bank people, they all universally agree that the market is going to decline. And the put call ratio is negative for the year, it's negative for the 6 months. But the put call ratio for the week is positive, and for the month is positive. So Gerald Loeb suggested that you put all your eggs in one basket, but watch that basket. Diversification, he calls it diversification. And so I listened to that and I put all my eggs in one basket, which is SPY. Putting all your eggs in one security could often lead to an Enron or something like that. So that has happened certainly and will continue to happen. But if you buy the American market as a whole, and as reflected by an exchange-traded fund which tracks the S&P 500, you are buying the American economy, the strongest economy in 200 years. So study the past if you will divine the future, said Confucius. So it's useful to think that the American economy is liable to be better than the Albanian economy a year from now or 10 years from now. So the short-term put-call ratio is positive. So I committed everything in my portfolio to SPY, and I'm going to hold it until the put-call ratio on SPY turns negative. And so that's what I've done. I committed everything I own to SPY, holding it, because holding a security that's rising is better than writing covered calls on it. So I'm not going to write covered calls on it, which I used to do a lot of. I'm simply going to hold it, expecting it to rise based on the put-call ratio, based on how most investors feel. And when that turns negative, which could happen within the next few weeks, I'll go back into cash. When the market is declining, being in cash is a damn good place to be. So that's.
Oh, I'm surprised. Milan, I'm surprised. So you are a market timer, yeah?
You got you there.
You could say that, Sasha, but I think this has been attributed to John Maynard Keynes. He said that when conditions change, I change my mind. What do you do, sir? Now, there's a lot of debate as to whether John Maynard Keynes said that or somebody else said it. It doesn't matter. When conditions change your mind to align with conditions. And right now, owning or not on or being in cash, using SPY as your investment medium is working very well. So, yeah, market timing, you want to call it that? Yeah. But, it does require me to look at the market once a day, maybe once a week. What you're doing, Sasha, your modern investing is based on watching the market constantly, and so if you have the time for that or the inclination for that, or if you enjoy it, and some people do, of course, go for it. Yeah, it can be a lot of fun.
I always think what I enjoy more than watching the market is playing the piano. Because you play the piano, let's say, for an hour, maybe hour and a half or so, and then you're coming back and you're watching the market. And when the market is going higher and higher, it depends on the market condition that regulates what repertoire I'm going to play next hour and a half. Jim, how you are doing on the market this day?
Well, as you know, September, October, November, I think are too turbulent for me, and I usually stay on the sidelines. December, I usually look at for tax purposes if I've got gains that I have to offset by selling something that went the wrong way and that sort of thing. So I might be a little bit more active in December. In January, I really look for bargains. I look for things that people have sold in December that are solid companies. So that's kind of the way I look at it. I don't have some guideposts like the put-call ratio that generates, my actions. I generally look when everyone is agreeing that the market is going to go down. I'm looking at that as a buying opportunity. And if everyone agreed that it was going to go up, then I would be selling. So I am just not put off by this. We've been threatened by a recession for 3 years now. It's not happened. The economy is still going strong. So I just don't see. Of course, the political and the economy can be affected by the wars that are perhaps going to get worse, and who knows? All of that kind of stuff is up in the air, and I think that makes people skittish. And I think everybody in the desert was probably very skittish when they were talking.
Jim, but do you think that people who are investing in so-called military-produced stocks, weapon producers, missiles producers, ATACMS weapons producing, take General Dynamics, take Raytheon, take Northrop, just almost anything. They have orders for the next
I
5 years
know.
and going to 724.
I
It's
know.
this war. It's such a great thing for American economy. It's incredible. It's even during Second World War there was no.
It's so depressing, but it's so true.
Yeah.
It's very true, Sasha.
Wars are very profitable unless they're fought in your own land. So
Yes.
a friend of mine,
Great
I
point.
mean, all the military equipment, it costs a great deal of money to manufacture the tanks and the aircraft and the bombs and what have you.
Everything. Yeah.
So a friend of mine says, why not manufacture all those things, let's say in the United States, go halfway over to Europe and dump it in the ocean, and then come back and say, we need more. And so it's the same as if you, people get paid for it, and then another group of people come and they bury that hole in the ground. They get paid for that, and then another
dig it up.
group and dig a hole in the ground again. And so as long as people are working and generating income, doesn't matter what they're doing. But
some
Milan and Sasha, along those same lines, I just came up with a new strategy. I think y'all are going to like my new strategy as the non-investor, and I just came up with it real recently because I was literally doing some dishes while y'all were talking in this show and everything. So I'm going to call it the household strategy. So I'm thinking that if I just invest in things that are in my household, that I could actually make some good money because I just using some detergent that was made by Procter and Gamble because I looked and see who the companies were and everything. And earlier I was seeing something that was in my house that was by Johnson & Johnson. And to your point and everything, because I know we were talking about dentistry earlier, I saw that I had some household soap that was made by something that you dentists know all that well called Colgate. Colgate Palmolive also makes soft soap and all along those lines. It seems to me that if I invested in those three companies, that would be a wonderful investment. So I'm calling it my household investment strategy. What do you think? It's a new strategy. I just made it up and everything. But could it work? Could it make sense? Because those are seem like those are three major companies.
Certainly makes sense. It certainly makes sense. Yeah.
Yeah. I don't think that people make a killing by investing in the stocks, but it's just as good as maybe even better than holding cash because some of these companies are paying dividends, and if you have extra cash available, I don't know, $30,000-$40,000, and you want to be super safe. Yeah, you can buy these companies, and I have one somebody, Mark, you know, who is doing the similar program about investing. He was holding Procter and Gamble for a long time, and eventually he got so bored that he sold it all. But at least he didn't lose any money. That's a really achievement. Yeah.
If you have a Sears catalog hanging around your house, don't buy it.
Yes, that's true. Sears is, and I don't have a Sears catalog. I don't even know that I have a Farmer's Almanac, even though that might have been a good investment back in the day as well. But there's no Farmer's Almanac laying around here at this particular time.
You know, Mark, your approach to investing is one that's been described by Peter Lynch. I've forgotten the name of the book that Peter Lynch wrote, but he bought some stockings, something, legs, eggs, something, because his wife happened to buy them. And so he figured now if his wife likes them, that ought to be good. And so it turned out very well. So your approach to investing, and you don't call yourself an investor, equals what Peter Lynch recommends. And he's one of the most successful investors out there. So you're on the right track.
Lululemon looked good to me.
Well, if you're looking at the food producing stocks or food trading stocks or something like this, by far the best investment is Costco. There's nothing can touch it. And you can look at the price action of Costco. It speaks for itself.
Yep.
And you don't need anything else. Just buy Costco. Walmart is second in line after Costco. But Costco is a superior stock. And the only thing I regret, they don't pay a significant dividend. So, but I made some money on Costco by selling cash covered puts. And I was always successful. But you see, with this, you have to wait for, because I'm greedy, so I have to sell not next month, but probably 3-4 months puts. So then you have to just sit on it and wait. But you're making money.
Yeah,
You
what
know,
about the competitors though? Because I know that when I think of Costco's, and actually I think that my dad has some Costco's memberships as the other family members, but there's also Sam's, and I know a number of people that like the Latin American company that is a wholesale company. At least I think they're Latin American, called Compare and everything. So are they worthwhile stocks that are similar to Costco's?
there is a Mercado Libre, a very strong Latin American stock, yeah. But I don't think that anybody can touch Costco because you see what other companies are trying to eke a little bit of profit of 0.1%, and undercutting other companies. Costco just collects membership fees, and
Yeah.
they can
It's
afford to
amazing,
sell their food at cost.
It's amazing, Sasha, because once you're successful, then you have imitators come on, and
Mhm.
yet no one seems to have been able to touch Costco in terms of what you just said. They have these membership fees that are built in, and so people are trying to do these discounts. Well, if you discount too much, you can't make it up in volume. So these companies are kind of not doing exactly. They're trying to imitate what Costco is doing, but not doing it quite the way Costco has done it.
You
And
can even
Costco,
buy cars at
you
Costco. They have great prices for new cars.
yeah,
Also, there is you can
gasoline. You can fill up while you're shopping.
absolutely,
Yeah.
Yeah, they got great gas prices, and definitely you can get the gas station because there's gas stations at the Costco's here, and I think even the Sam's might have one as well. But definitely Costco's does. Is it worth it? Because those that are listening to invest in some of these companies that came out to some degree, they were out before the pandemic, but they definitely came around during the pandemic. And I'm thinking about things like Uber and Lyft and DoorDash and Grubhub, because I don't know how they're doing on the stock, but I do know that they seem to have had a boost during the pandemic, and a lot of people are still going out there and using them. But I know that as a corporation, they've had their issues and everything. So do you think that those are companies worth investing in, particularly you, Jim? Because I think they came out of the West Coast, if I remember correctly, and everything.
Well,
there is a problem with Uber that some drivers
Oh
they
yeah.
they're raping their female passengers, and if it wouldn't be for that, that would be great investment. But so you don't know how many rapes will be reported on Uber and others, so that quite worrisome. And,
Well, the other thing is I've been talking to Uber drivers for years now, and they were very content, very happy doing what they were doing. And then Uber changed their policies. They're gig workers now, and they cancel a lot of the offers that they get for rides because it's not profitable for them. It's a waste of their time and money. So they're not as happy. And so I'm not sure about the long-term prospects because you really have to treat the people.
Just before you continue with that, let me go back to Costco for a minute. I don't recommend buying individual stocks. We always talk about buying the American market as a whole, but my wife and I profit from Costco enormously. What we do is we go there and we buy their hot dogs. They're selling hot dogs for the same price that they sold them 40 years ago.
Oh my
Now,
goodness.
where else can you get a bargain like that? Yeah.
I hope these hot dogs are not 40 years old.
Yeah, that you go to the movie theater for those.
You've already had an accident, Milan. We don't need 40-year-old hot dogs. That would cause some serious indigestion. I'm going to bounce off, but before I bounce off, I got to ask Jim another quick question. Everything, because on his show that he does every Friday, and this is another possible investment that I'm thinking about. You had a guest that was in the dating lane. Should I be invested in eHarmony and some of these other kind of shows? Because you had a guest that was in the dating lane. So I was wondering, should I be invested in those companies as well? Because that was your last guest. They were in the dating lane, and there are a number of those kind of companies. So do I need to invest in those kind of companies?
Well, we were focusing on online dating for older citizens. And,
Golden Bachelor, right?
Yeah, that's right. And most of them are designed for young people. So I have absolutely no clue about that. And so if I don't understand something, I don't touch it.
Jim, and if you're not so sure about this investment, look at some other stocks like Nvidia, maybe, and Microsoft. Maybe they will do even better.
Yes.
We will do much better. Well, I'll turn it back over to y'all, but I just had to add a little bit of lightheartedness fun. But I'll let y'all go back.
A 40-year-old Twinkie should be okay, Mark.
Huh?
A 40-year-old Twinkie should still be okay.
A 40-year-old Twinkie should be okay, but I'm not sure about a 40-year-old hot dog. That I'm not sure about.
Well, long live hot dog.
Oh, but yeah,
Milan, yeah,
go ahead.
I would like to, sorry, Jim. I would like to mention something what you said before about put call ratio. Well, yeah, I'm not going to repeat what I said many times before. What I'll say is that the intelligent investor wouldn't mention the put calls simply because it didn't exist at the time when the book was written, because they started trading on Chicago Board of Trade in 1973. So this is the only time when you can start doing some investigation. One fact is absolutely undisputable is that in all 50 years, there was only 1 year when buyers of options beat sellers. It was 1987, the year of the crash.
Buyers.
That was the only 1 year. So 49 years, sellers were taking money from buyers, month after month, year after year, except 1987. So it's
Yeah,
a
we
promise.
tell our members Monday morning millionaires. Now, the reason why the operation is called that, because most of our members who are either retired or close to retirement make more money on a Monday morning before breakfast than they ever did during their best week at work. And we
Milan,
tell them,
what time do they have breakfast? It's
yeah,
like,
well, the market opens, like, I think, at 9:30, so it has to be around 9:30 or so.
so
But
they
we
have
tell
late
them,
breakfast.
never buy cash cover puts or covered calls. Only sell.
Actually, a very interesting thing happened to me on Friday. I sold puts on the uh, what is I forgot the Amazon.
Hmm.
I sold them. Stock was around 130 or so on. So I sold 128 puts, and I got a lot of money for that. And guess what? The stock was going all the way down, lower because all market was reacting. But they had earnings coming up, so I didn't worry about that. So it was a report, and it was already $119. And all of a sudden, here is a report, and the stock on Friday going up to 128, and then 129, almost 130. So I think, okay, the stock will be taken away from me. Okay, that's fine. So I will pocket whatever money I got from the premium. And then at the close, the stock went somewhat down. It closed at 127.74. I sold 128. So I started to think, interesting, if somebody would bother to exercise my puts and put me in stock at 128, well, it's 127 and 74. I had no idea. And I checked my account half an hour before the market opened on Monday. I don't have stock. Okay, so they expire worthless. Bam, the market opens and I see that I have 300 shares at 128, which was my price, and stock is trading at 131 right at the opening. I immediately sold the 300 shares. So I pocket another $900 just by fluke. Really.
Right.
I think somebody was stupid enough to for 26 cents to give me the stock. That's incredible. I was starting this. So by far the funniest $900 I ever made. just somebody just brought it. Oh, Sasha, where are you? Here's $900. Oh, okay. Bring it.
I'll take it. Okay.
I'll take it. Of course, there's no way.
But Sasha, I did say earlier that I don't have anything like that, the put call, but there are two things that I am monitoring quite closely, and is the Fed going to raise interest rates? I've been against what they've been doing for since they've been starting to do it, and I think that they're done. I'm not sure, but I think that they're done, and they've been trying to cause an artificial recession by raising rates. They're at like what is it, 50-year high or 30-year high or something
Yeah,
like that.
yeah. But there
And
is a danger, James. There is a great danger that first of all they can indeed inflict a recession, and number two, the higher interest rates, the more money it takes to service the debt.
yes,
They're already spending well over $1 trillion just to service
I
the.
think it's been mind-bogglingly dumb to be doing what they're doing, but they've been doing it. But I think they're going to stop, so I'm happy about that. The other thing that I've been paying attention to, and I know that you're a supporter of this, Sasha, is people when they announce earnings. And what I've been seeing is that the companies are still making a lot of money. Earnings have been pretty darn good.
Obviously.
I don't see that changing. I don't see why it would change. I don't see why all of a sudden these companies would stop. Some of them have been making record profits.
But what's interesting is that if you take out 7 leaders of S&P 500,
Mhm.
where is the S&P 500? Zero. They, they are not making 493 companies are not making any money, and their stock
Sasha
is.
wants the S&P 7, not the S&P 500.
There are some ETFs actually that investing in this market leaders, and I would agree with such strategy because, see, so people may believe that okay, they had great earnings, but somehow it will come to an end. But they are wrong. The same thing with Lululemon, for example. Okay, they had a great quarter. The next quarter will not be so great because more people are buying certain products, whether Lululemon or Nvidia chips or anything like that. The more people will be compelled to buy the same products over and over until somebody will come with a better product.
It's what Mark was saying about, like household things. It's like, I saw all these women in workout clothes, and gradually that, it came to become known to me that they were all Lululemon. So they were buying stuff, and, women look at what other women are wearing and they buy the same kind of stuff. And it seems to me that all of a sudden that was the thing to wear. And, I'm kind of naive about that sort of stuff. So I didn't cash in by buying the stock when I should have. But that's the kind of sign that Mark was talking about. You see these types of things in your day-to-day lives, and you're thinking, "Hey, this is a change."
And
People,
it's not too late, Jim. Especially another factor what I want to add is important is when a company is joining S&P 500. That happened with Lululemon. It's happened with Palo Alto Network. The
yes,
boss joined S&P 500. Did you see what happened to their stock? It jumped
I
considerably.
know, I know.
So this is another factor. The same as earnings.
You're talking here. We have to look at long-term results and short-term results. When you take a look at the long-term, which is what we're into investing for a lifetime, long-term investing. You take a look at SPIVA, which stands for Standard and Poor's versus active investing. The vast majority of investors are losers after a 10-year period.
Yeah, they're giving $900 to Sasha. Most of them are not going to beat the market. You're absolutely right about that, Milan. I think you're doing it.
Especially those who are buying from me.
Yeah.
I love them. I love them.
Equaling the market is something that is a piece of cake. You can teach a high school student, here's how to equal the market. Buy SPY. That's it. What you want to do is buy the American economy as a whole, the most robust and productive economy in the last 200 years or so. And so, like Confucius said, study the past if you would define the future. In the past, the U.S. market has been the strongest for a couple of hundred years, is likely to remain that way if you listen to Confucius. So we need to think of it that way, because looking at active investing versus simply holding S&P 500 by buying an exchange-traded fund that tracks it, like SPY, outperforms active investors more than 95% of the time.
Milan, I would like to offer my view on this theory. Take a math. So you start with simple things: 2 plus 2, 5 plus 5, and then you're going farther and farther in first couple of years. Then you start geometry, then start higher math in your university or so on. What you're teaching is pretty good for a classroom full of 8-9 years old who learn how to do 2 plus 2 and 3 plus 5 and 7 times 6 and so on and
That's
on
not
and on.
quite
Pretty
fair.
good. Then you go to a next level. You already know this, and hopefully well. You're going to a next level and you learn farther and more detailed view on math, and then in university higher math, and you do a lot of studies in statistics and everything else. So this is a different level of understanding the market and so on. So what you're teaching to 8-9 years beginner is good, because I think this is pretty good base on where to start, what to do if you have no idea what to do and you have $10,000. That's what you do. First of all, you can't afford to lose $10,000. And buying S&P units probably is the best way of avoiding losses.
A couple of things about what you're saying here, Sasha.
it.
First of all, there will always be investments better than the one that you have. Always. So you have to accept that. Don't be upset by the fact that they're better investments, because that's the way it always is. The other thing is, many of our members in the Monday Morning Millionaire operation are actively involved in the businesses that they have.
You told us that they're mostly retired or close to retirement.
Well, the ones that are close to retirement, those are the ones that I'm concerned about and addressing here. The ones that are close to retirement, still, most of their income comes from their jobs, from what they're doing, from practicing veterinary medicine or general medicine or engineering or dentistry or what have you. Most of their income comes from that activity. So therefore, keeping investment activity down to a minimum effectively is better for them, because their portfolio will grow more from their earnings on the job than it will from their investment activity.
Okay, and sooner or later they will retire.
Yeah, that's right. Yeah.
With all your other retirees in your fund.
Yeah.
What they're doing? Still the same thing.
When they retire, the same thing is it'll take very little time to behave.
But they have no time, and what they do is.
But Sasha, they may not have interest. They may not have the interest.
Okay,
The point I would say.
That's a good point.
Yeah, and I would say I would be a little bit more charitable. I think what Milana is saying might be like a introduction to algebra. Because it does take a little bit more than adding just to do what he's suggesting to do. And I would also point out that the people that go on into the higher math and to do statistics and something like that, they still could be bad investors. It doesn't make them good investors.
No. I'm not comparing those who are into statistics are better investors. Not at all.
Exactly. So, this is the type of thing is that what Milan is suggesting, what appeals to me about but I am interested in investing, so I'm not really the target audience that he's appealing to, but it's the people that don't have the interest in tracking things at a level that you and I do, and you in particular, because you get enjoyment from it.
Absolutely.
And some people think that this is a headache, and if it's a headache,
I think we have to, Jim. I think we have to rename the show "The Modern Investing" for people interested in.
This a longer title. I don't think that's going to work on Pod TV and everything. Let's go longer title. I'm having a hard enough time with change your mind and everything.
That's a good point, Sasha.
Or we have two programs: one that I just mentioned, and another one, Modern Investing, for people who are not interested in investing.
Well, I think
Anyway, listen, this is very serious discussion here. So I'd like to lighten it a little bit by telling a Jewish joke. So there's Moshe now. He's on his deathbed, and he says, "I want to convert to Catholicism." And his friends say, "What? You've been a good Jew your whole life. You go to synagogue every Saturday. You had a bar mitzvah. You celebrate the Jewish holidays. why do you want to convert to Christianity now? And he said, better one of them should die than one of us.
Oh, I shouldn't. Oh, that was good. You told
That
it
was
well.
a good joke, and I'm not even Jewish, but I did enjoy that joke. That was good, Milan. So that was very
Oh,
poignant and
I
everything
didn't
along
see
those
it
lines.
coming.
Hey,
Got me.
Jim, just really quickly, well, one, I got to tease you because I heard police siren, so maybe we got to invest in the police as well because somebody's coming to get picked up because I heard a police siren in the
Uh-oh.
background in one of your offices and everything. But the serious question that I had is, this is we've had the change in seasons. It's starting to be fall almost next. We'll have winter and everything. So is there any such thing as a seasonal investment, or should people even be looking at seasonal investments, or is that something that is totally against the idea of investment? Because like I said, we're getting a little bit colder here. So I just wondering, is there such a thing as a seasonal investment? And is that something that people need to look at from a seasonal standpoint?
Well,
Anybody?
I don't have an answer to that.
I don't do that personally. I don't count 4 seasons because I'm not that active a trader that would imply to me that you're buying and selling more frequently than I would. I would look at the company. And I always like what Milan says is look at the management's track record, because when I say I want to, a company that's good and has been beaten down in the market, that's very attractive to me. And what is attractive to me about it? What makes it a good company? It's usually the management of the company, what their product is, or what their strategy is.
Right.
So if I look at a company that's got a good strategy and a market that's not going away, and it's one of those companies that's well run, employees are pretty satisfied working there, and it's beaten down temporarily, I'm buying. That's really attractive.
Yeah, Jim, but you have to look at the chart too, because the chart will tell you a lot of things. Because if it's a good company with a good management, their stock is going down, it's a little bit worrisome. Maybe there are some other factors.
Usually it's a news cycle or two.
Well, that's what I'm asking. But are there any companies that are
stop going down, make a base, trying to get out of the base? But you see now with electronic trading, and see what they're doing to market makers. Let's see, they're bringing stock like AMD. They're taking it down, and drips. Now, so supposedly they should make a base and then trying to break out of the base. But today, sometimes it's just, most of the times I noticed, it doesn't work. They're taking stock up 8%, and now and it will continue to go higher. Look at tomorrow, AMD, and day after tomorrow, they will continue going down. So you, even if you sold some of the stock and you're going to get it back, you have to pay way higher prices. So this is in my thinking, it's a market manipulation because nothing really happened. So to bring AMD from 94 to 109 in a matter of 3 days.
It's a news cycle. They put it out there that they got the AI chip, and then everybody went, "Ooh, money's to be made."
Jim, but why did they announce that in the time of earnings? Didn't they know that a day before or
I
2
think
days?
so. Yeah. I know what you're saying, Sasha. I know what you're saying.
Okay.
But Sasha, what you're talking about is momentum investing. Security is much more likely to continue where it's going than it is to reverse itself. Much more likely to keep on going than it is to reverse itself. But reversal is guaranteed, even though we don't know when. So that's why with the momentum investing strategy, it works so long as you get out in time. But it requires you to pay a lot of attention to what you're doing. And you can get excellent results.
Okay, I'll give you an example of my investment in the last couple of months in Netflix. Netflix was taken down from about 460, 470. It was taken down to 350. It's a drastic, horrendous downward move. Now, I didn't suffer because, first of all, I have small position, 200 shares, and I sold a deep covered calls. So I was watching, and I knew that once earnings will come, the stock will most likely will go higher, and that's exactly what happened. They had earnings, positive earnings. Stock started to jump out of its base, and I still have stock, and I still sold puts. I sold December, I think December 17 calls. So I'm still waiting until they will either expire or stock will be taken away from me. Either way, I'll end up making money. But we'll see. Maybe I will buy them back to continue to have stock, and will sell maybe March or April covered calls.
Sasha, what do you have to say about this? For quite a while, Enron and Nortel looked the same as the stock that you're mentioning here. They were going down, Enron and Nortel. And you are waiting now for it to go down some more before you buy some more, and then the stock falls out of bed. That has happened lots of times.
Both stocks are unique stories. There are problems with management, especially Enron case.
That's
as
true.
we know. Okay, so from time to time, that stories will repeat. It's not the end of the trading. There will be stocks like Enron and Nortel. But look, interestingly enough, the story with Nortel is very interesting. Remember, the Canadian company Bell Canada owned 60% of Nortel. So the professional traders, when Nortel started to going much higher from almost zero to say $50, $60 a share, so what they were doing, they were going long on Bell Canada and selling short Nortel, because obviously sooner or later Bell will start rising, so they will make money on Bells, and they are still can make sooner or later money on their Nortel position. But what's happened is that the situation became so drastic that these professional traders, they were getting margin calls. They could not hold their position, and they had to liquidate and taking loss both on it was so there were two fiascos, one on the way up, one on the way down. Way down was the final one.
Yes.
Hey, Sasha and Milan, and even definitely you, Jim, as well. Part of what I was talking about, and that's actually where I got the idea from, is that apparently there are several stocks that do better in certain seasons than others, and that's what I meant when I said seasonal stock holdings. Because as I was looking up a particular article, they were talking about how Mattel did quite well around the Christmas season, and there was a couple of other companies that did well around the summer seasons and everything. I think Lennox, which is dealing with refrigeration, might be one of those and everything. So as one that is particularly you, Milan, that is in the stock market, I am seeing that even like Dick's and some other companies are known for more for their particular season of the year, because apparently Dick's is a sporting goods company, so apparently they're going to do well in the summer, because that's when people are going out hunting, fishing, and golfing, and all along those lines. So that's what I was asking about. Is there things that you would go into because they are more popular in one season or another? I'm imagining that. I can't remember who does Barbie, but whoever does Barbie, that stock is going to be soaring and all of that because of the movie. But I'm thinking there are certain things that are more apt to be invested in because they are a product that is in a particular season and all along those lines. And that's where I was going with that question.
You're quite right, Mark. But there's an interesting side comment I'd like to make here. About 30 or 40 years ago, maybe a little more, the highest paid executives were executives of Toys R Us. Toys R Us executives are making more money than Wall Street bankers are doing today. Unbelievable incomes they were making. So I walked into one of their stores to see what they were selling that anybody needed. And you know what they were selling that somebody needed? Zero, nothing. There was nothing that anybody needed. Tons of stuff people wanted, but not anything that anybody needed. And their executives were making in a week.
Yeah, they make a killing, and there's another company.
Hey, mothers needed Toys R Us. Believe me, they needed to give their kids something.
But there's another company that I don't know. Well, I mean, it's needed all the time. I mean, y'all travel more than I do, and it fell in the seasonal category as well. And I can't figure out why Hyatt would be in the seasonal category, because Hyatt is a hotel that people use all the time. But maybe it's more popular in one season than another. But they were definitely listed as one of those seasonal companies as well.
Yes. Yeah, and a hotel and restaurant. There is a seasonality to those things as well. One thing that occurred to me just as you were talking, Milan, the people in the desert, a lot of these people that are talking about the develops that does it. You know, a lot of them are connected to or are Wall Street bankers. And, you know, Wall Street bankers are probably not feeling really good right now. They're not part of the general economy that is doing well, you know, and I think that their sentiment is spilling out and it's getting quoted a lot. And I think that's part of what the reason is for this negative feeling about the economy in general. And I say, keep pointing out there's this disconnect between people's individual experiences, which is positive, and their expectations of the economy, which is negative. And so how can it be that everyone's doing pretty well and we think that the economy overall is doing poorly? It doesn't make sense to me. And, you know, and
a lot of people, when asked what they think about whether they're doing today better than last year, for example, almost all of them saying, sure, we are doing better.
Yeah.
And what do you think about economy? Is it better today than last year? It's terrible. The economy is terrible.
I don't understand this. And I think part of it is the media. I really do think that they're spreading information. They're not saying, hey, look, unemployment is at record lows. You know, they're saying inflation is at the highs. So what the media is telling people is the bad news. And the good news is just not as exciting. It doesn't get said. Doesn't get
Of course, yeah, bad news sells. Bad news sells and good news doesn't. Anyway, I was going to make a comment about the Japanese economy, which still hasn't recovered from a high that it hit 40 years ago. And it was so unbelievably overpriced. Real estate was overpriced. The securities were overpriced. At one time, the land that the Imperial Palace sat on in Tokyo, about 10 city blocks, was valued at more than the entire state of California.
You're right, Milan. It wasn't that long ago. Well, 40 years, I guess, is a long time. But there was a movie that was Blade Runner. It was all about Japan had taken over, and that movie was not considered to be speculation at the time. It seemed inevitable. They were just buying up all of L.A.
Rockefeller Center. Japanese, remember, they bought Rockefeller Center in New York.
Yeah, and so the real estate especially was, priced way up. And then when they hit a rocky stretch, all of a sudden they couldn't sell all those assets.
They sold it for 1/10.
Well, yeah, that's what I meant, right?
Yeah,
they couldn't get back their money.
Absolutely. Well, listen, I'm getting a lot of financial newsletters and so on. 75% it's doom and gloom that the US dollar will go down, the economy will go down, the stock market will crash, everything on and on and on and on and on.
Recession right around the corner.
I'm not reading this newsletter. I put them in a garbage right away. And but that's good for stock market, because the more doomsayers and gloomsayers there are, it's better. But the only unfortunate thing that a lot of people are reading this newsletter and they are repeating, oh, economy is horrible, US dollar is going down, and this is going to crash, and that is going to crash. Look at the market, look at the economy, the real economy, the real market. It keeps going higher and higher, and I think it will go. So, you know how many people saying that this year there will be no Christmas and New Year's rally. This year is different. There will be no rally. So go and say so. It will just help us. Gentlemen, I would like to thank you so much for today's program, and have a good luck in the market, and we'll see you same time next week.
Thank you.
Thank you very much. Bye-bye, everybody.
Bye-bye.
Bye.